Let's switch gears here and talk about the travel sector. We've got shares of Airbnb actually falling after forecasting a weaker than expected revenue in the second quarter, the current quarter. The outlook here for nights and experiences booked in Q2 also showing some slowing growth. Now, this comes despite the company saying it's already experiencing robust demand for travel ahead of that peak summer season. Here with more, we want to bring in Bernie McTernan. He is Needham & Company's managing director. Bernie, it's great to have you here. So we just laid it all out, right? They did beat when it comes to Q1, but I think the real issue here and why we're seeing the stock under pressure is some of the commentary that we've got surrounding guidance. So really, what does this signal to you just in terms of not only Airbnb, but the travel industry at large and some of those headwinds that are facing the industry?
Yeah, well, I think it's key, especially when you're thinking about the stock reaction today, is the expectations coming to the print. They certainly raised following last quarter, and numbers probably flat to moving slightly up for the year for Airbnb. And again, some of that commentary that the company made on investments that are coming, especially in the second half of the year around sales and marketing relative to our expectations, likely keeping a lid on what some of the bulls were hoping for. And remember, this is a transition or investment year for Airbnb as well, too. As you mentioned, the broader context of the travel industry, Airbnb's growth has really slowed down to looking more like Expedia, looking more like Booking in the high single, low double-digit range. And this is because you had the business doubled basically from 2019 levels, so growth looking more like the rest of the industry peers, but valuation still at a premium, which is one of the reasons why we downgraded the stock heading into the print.
What do you think this next iteration of Airbnb looks like, especially as the company was really focused on providing a value pitch and positioning to consumers before? Where do you see that moving now?
Yeah, well, first off, I think it's important to remember the opportunity that they have. 90% of traffic comes to Airbnb organically, which sets them apart from their peers. And so they're trying to leverage that to move into other services, which makes a lot of sense. Brian Chesky, CEO, was talking about like an AI OTA app last quarter. He was talking about Icons this quarter, which is a high-end or at least a very unique experience.
They're going to be like the sneakers app with that, Bernie. I mean, people just going to be looking up the iconic experiences and stays and trying to make sure that it doesn't get all booked up before they can hop on there.
Well, that's the thing, is that we're talking about 4,000 nights per year that are going into this, and a company that does 500 million nights per year. So I think it's important not to, there's a long way to go to make experiences broader.
Fair point.
But, as we're talking about expectations, when we talked to investors heading into the print, it was that A, they thought there was going to be upside to numbers for the year because of third-party data. And then B, this call option on expanding beyond the core. But as again, like given the premium valuation of the stock, we actually think it was a call option. I think you had to really believe that this was a company that would be able to take material share in moving beyond the core. So if it was that AI OT app, really taking share from the Expedia and Booking, which again, that wasn't something that we were willing to put into our base case at least.